bring in somebody who has seen, certainly from the CEO standpoint and from a governmental standpoint, all kinds of market gyrations. Carlos Gutierrez is the former Commerce Secretary, but also the former Chairman and CEO of Kellogg's. And he knows I love the red berries, my favorite, Carlos. But on a day like today, let's first start with your CEO hat on. Tell me, as a CEO, when you see a stock like your own that may have fallen pretty precipitously for no apparent reason except that the Chinese markets are failing at the moment, what do you as a CEO and what do you recommend business leaders do right now?
Look, I think this idea of calling this a correction may be understating it, and it may be minimizing what's really going on. I think CEOs should be worried about growth and where their growth is coming from. And you look at China, I mean, these numbers are pretty dramatic. Exports are down 8.5%. Purchasing Managers Index is low, and especially for China, it continues to decline. You're seeing things that, and the fact that they devalued their currency, today they announced the capital requirements are lowering so that they can lend more money. Those are all indications that the Chinese government is concerned with growth. And we've got to remember, China represents half of the world's GDP growth. If China isn't growing, then the world is in trouble. I would be worried about the fundamentals. Where are we going to grow the business, especially if China is soft?
Well, is there any way to insulate the United States from a very soft and almost liquefying Chinese problem?
Well, currencies around the world are crashing, and there's no doubt about that. So companies with a huge international presence are going to feel it when they translate the currencies. Companies that are strong in the U.S., I mean, right now, the irony is this is the safest and the healthiest looking market that I see. Companies that have concentration in the U.S., that have a growth business in the U.S., are going to do quite well, at least for the short term.
Okay, we're about to go down. Hold on one second. We're about to go down 700 points. In fact, we just got down about 699. I'm not saying we're definitely going down that much, but we appear to see some momentum lower, Carlos. And I think your point is very, very important, that perhaps people are understating it, but overall, things are not as bad as they look. We have had job creation in this country. We'd love to see it much better. And we're looking at durable goods sales that seem to be picking up. The auto industry is rather healthy. When you see Jeep sell 32% more every single quarter, somebody's got some money here.
I agree with you. I mean, I think the U.S. looks pretty darn good. And, for those people who were forecasting the fall of the U.S. economy is looking pretty stable and pretty solid. It's China that I'm worried about. Automobile companies, for the first time, are not running at full capacity in China. People are expecting China to be selling 40 million cars by 2035. Is that really going to happen? And what does that do to the price of commodities? We should be keeping our eye on China because that's where the fundamentals are. And I think this is, the Shanghai stock market, I think that is a symptom. The big issue is, do we have excess capacity in real estate? A lot of that stock market money is moving back into commercial real estate in China, where there's already a bubble. So I would keep my eye on China and look at the fundamentals. And what does that do to global growth? And where do multinationals find growth in an economy like this?
Markets really like what you said, Carlos, because we just came back by about 70 points. We're now down 607 points. We were down 697. So keep going.
I thought I scared people.
No, you don't scare people because you've been in the game from both sides as Commerce Secretary and, of course, as the CEO of Kellogg. So consumers, you know them well, having been a consumer-based CEO for Kellogg. Do you see a fearful consumer right now, or a relatively sanguine consumer who's just a little bit more frugal, having learned some real lessons from the financial crisis?
Yeah, I think if you look at real wages and the fact that they're still not where they should be, especially with GDP growth, I would guess consumers are going to continue to be very cautious. You're going to have the high end, which is always in a world on its own, but your average consumer is going to be continuously cautious, even in the U.S., because you still don't have the wage growth that we need. So, it's hard to find, other than the U.S., it's hard to point to some place or some industry and say that's the catalyst for growth. It just doesn't seem to be there. So I would be very cautious. This is, to me, this looks like more than just one of these corrections that's going to go away. I'm a little bit more concerned than that.
Secretary Gutierrez, it's a pleasure to have you. Thank you so
Always
much
a pleasure.
for taking
Thank
the
you,
time.
Liz.